Please welcome Mel Carvill, Chief Officer for Government, Investor and Public Relations, Home Credit.
But Mel, I want to start off with you, if you don't mind. We were talking beforehand. One of the issues with financial inclusion is it's very well understood to be very important for economic development. But it's not yet really center stage in the global policy debate, I think. What's happening, do you think? Is enough being done to coordinate all the bits and pieces around the world? Are the dots being joined? Or is financial inclusion still very disjointed?
So 8 years ago, the G20 endorsed a Financial Inclusion Action Plan and established a global partnership for financial inclusion as a means of implementing it. So there's no doubt that financial inclusion is an international policy priority. And there's a lot of work on strategy, but as perhaps a practitioner, I would suggest that the implementation in countries is a little bit patchy. And I think what's missing is usually an institutional framework to do that, because we need a coordinated action from government, lots of aspects of government, education, finance ministry, regulator. We need action from companies, and we need all that to be coordinated. And right now, that's not happening.
Not happening. Is the momentum just not there at G20 level? Is there sufficient support not there?
Some countries are making greater progress than others, but it is difficult, I think, for government, it seems, to coordinate the different silos within their own organizations.
Now, just in terms of some governments making progress, I know you have experience in China, for example, with financial inclusion. What kind of lessons can be drawn from what you're seeing in China? Is there something of a model there for other parts of the world, or is it more a policy development that is unique to their system?
So one of China's clear policy priorities is to lift their people from poverty, so poverty alleviation. The efforts in China have been split between the government and private sector, such as companies like ourselves. So financial inclusion is a key element of our corporate social responsibility. And we've been running programs in, for example, in Shaanxi province, which is a relatively poorer area. And there's been a curriculum developed for schools, and that's been implemented. Chinese have been very effective. They've done it very quickly. And we'll see how that progresses. The real challenge is to achieve scale if you're a private sector operator. We've put 2 million people in China through financial education, and financial education is a key element of financial inclusion. It's, in a sense, the demand side of the equation, making people understand how to manage their money and what products are out there. But it's hard to make that scalable when you're doing it through community work groups, in shopping malls. We need to somehow get it online. That won't work everywhere because not everyone's online. But one idea that we're working with the Chinese government on is gamification, which of course is a kind of buzzword of the moment in the fintech industry. But people will perhaps be more interested in learning about budgeting if we can turn it into a game.
Right.
For financial inclusion, cultural and psychological factors are a big influence. And that means that the program needs to be tailored to the local culture. But I must say I agree that the mobile technology has really massively increased access for people who perhaps, for the reasons you outlined, wouldn't be able to do it before.